Hello, everybody, and welcome to the Plus Three Futures and Commodities Show. My name is Ben Maldonado, and as always, I'm here with my partner, Barry Hederachi. We are recording here on Friday, April 11th, about an hour after the close. And the big question we came up with is it buy the dip or sell the rips?
Hmm.
That's what we're going to look at today because we've had, roughly 5, 6 weeks down. Then this past week, we had a really, really strong counter trend rally. And we're just going to look at the evidence, look at the levels, and see, which strategy going forward here this coming week is going to give us the highest probability for profitability. How
Hmm.
we doing, Barry?
Doing pretty good. Doing pretty good.
Today was kind of like a holiday compared to the rest of the week.
My
The
goodness.
way the market traded today.
Yeah, yeah. Almost took a little getting used to.
Yeah, it was like, come on, where's I need a hundred
Mm.
point move here in
Yeah,
5 minutes. Where is it?
yeah. Exactly. Well, let's see if we can find it.
Yeah.
Well, start off with the cash, like we normally do.
Hmm.
Now, last Friday, we also did a midweek show and we published it on Wednesday or Tuesday night or Wednesday morning, Tuesday night.
Yeah.
And you guys can catch that. We talked a little bit about what was happening. But really, if you guys are catching just the weekly shows, weekend shows, last week we left off with two things. One was is clearly this 45-day calendar day mark that showed up on April 7th. And because that was Monday, it was coming over the weekend, but you got to push it forward to Monday. And we were looking for some kind of return, and we got that. I think for all practical purposes, we got the low. We rallied right into the 90-degree level, and which happens to be right around 54.17, 54.17, 54.20 on the SPX. The key now is, if we can settle above this 54.17 level or not. If we stall here, by the time the 17th, 18th comes around, I think there's another. You have a cycle, Rebel Yell hitting here soon, right? Another one. When's your
We have
next
a
one?
Rebel Yell on Monday.
Next Monday. Okay.
Yeah.
So
Really interesting timing, isn't it?
that's very close. So 17th will be a few days off, but 14th, 15th.
Hmm.
If we go to the 15th, you're one day off. That's not bad. So next week is going to be sort of important, mainly because of Rebel Yell, which has been hitting pretty well lately. But the cash is 54.17 to 54.20 level becomes important. And the idea there is if we can settle above it or not. If we don't, we can expect continuous weakness, obviously, because we just pushed up and tried to get on top. We really couldn't really even really stabilize about 53.15, which is another level that we have. I didn't expect us to hit this number, in like 2 days. That's the thing. I thought,
Right.
you know what
Right.
I mean? I thought it'll give us enough time. Yeah, that's about a 5, 6 days worth of movement, even if it was moving fast. But here it was so fast. I feel like, now time has to sort of burn down a little bit. And that's why today, we were just kind of sideways, not a whole lot of movement. We have to kind of back and feel a little bit.
Hey, Barry,
So,
real quick, for those who aren't familiar with the Rebel Yell cycles, if you're new to the podcast, March 26th was the last hit,
okay,
which was
okay,
right at the top of that counter trend.
right. Yeah, yeah, that's right. I remember that.
Yep, right there.
Perfect. So, yeah, that's perfect. So we'll get another one, and it'll be right in the middle of this counter trend. So we'll see how that works out.
Right.
Structurally, as you guys can, I don't have to go through all the details, but as you guys can see, we have a structural resistance starting about 5,500, and from 5,500 to 5,750. It's basically all this, in between we have resistance. So I don't want to get too stuck in that. Let's just take one cycle or one leg at a time. So in doing that, because we were looking for that low, that 45 from here, 90 from the December high, we'll call that a low. Now we're looking to where the counter trend's going to terminate. And like we said, 17th to what's your date? 19th?
Monday the 14th.
14th, right? Yeah. So 14th to the 17th, we have a little bit of a window there, which is pretty much all of next week. So, so we'll see if we can bracket that into a good price level. And if you guys want to catch those every day, join us, follow us on X, and because we both post, S&P, the cash, the NASDAQ, all the indices. So you can follow us there day to day. So that's all I have for the cash. Basically, there isn't a whole lot to say. We were looking for a big turn because of the weekly, monthly cycles that came up. Now we know we don't have a whole bunch of weekly and monthly cycles for a while, so that high needs to hold, and that was the whole point of us talking about it from December all the way to February. Now that it hit, well, I think the trend is really easy to tell, right? We're headed where it's a downtrend, and in downtrend, we're just basically looking to isolate these counter trends. And we got the first one, which happened right at that rebel yell cycle we just talked about. And the second one, I mean, it'd be amazing if we can hit 2 in a row, right? And if we can get that nailed for next week. So we'll see how that works out. We'll watch for that. Let's move on to the futures chart. So here's the front month, and this is the chart we've been watching for a while. Here's the 90 days that we came into the low from the December high. That's the 90 I talked about earlier. It was a couple of days early, sure, but that's where the 45 came in. They both kind of lined up for Monday. Now, the interesting thing is the bounce off of that came right into the 90 also, and at 55.17 being the 90-degree level. I'm going to ignore the 90 here for now, only because it's so close, too close to count this and that. But looking at all the cycles, we have to go with the low. And I think upside is what's left. Like I said earlier, I didn't expect us to hit this in 2 or 3 days. So we got here fairly quickly. And so 55.17 is a number. So watch that carefully. Somehow, if we can get above that, obviously consolidating above this 55.17 will be positive, and hanging around or consolidating below that, it really kind of depends on the pattern, but let's watch it. But clearly weak, right? It's on a weaker stance as long as we're below 55.17. Now that we tapped it, right? So we came from around support, came all the way up to resistance, and now we're waiting to see what the next how it unfolds from here. And waiting to see means not like we don't know. We're looking to see if we can get above 55.17 or not, basis the daily. Is that pretty clear, Ben? Is that good enough for?
Absolutely. I mean
Yeah.
that you and I said we were talking about when we were isolating the low, 5,500 looks reasonable for a target, and they hit it in a day.
Yeah, exactly. So,
Yeah.
and because it's so fast, we really have to be clear headed. I think, consolidation above or below is the next step thing to watch. And also look for reversals, on the daily. Reversals on here, we're talking 100, 200 point reversals. So might be better on 4 hour or shorter time frame to watch those. Anyway, that's it for the futures and the cash. I want to look at the weekly chart that we've been watching. And this is the one that helped us to isolate the high when it came in and the break of this great circle. Yeah, it was off by a couple of bars, but I think good enough, it did the work, served its purpose. Last week when we talked about this low, it's funny, last week we stopped right at the 50.76 level. You can see the bar prior. And when it stopped right on there, we really have to watch to see, is that we're going to bounce off of that, or are we going to go a little lower, maybe false break these lows. Sure enough, we did. And I remember looking at it last week and commenting, how we have structural support right about this 48.19, 48.20 level, just the old highs from 21. And that's pretty much where we came down to when we found support on Monday. So, old fashioned chart work just doesn't go out of fashion, right? Everything works. We also
Question.
talked about this geometric line that caught the high, meaning that we had this line prior to the prices getting there, So that's the importance of this. and price got there, touched it perfectly. Now, I did some parallel lines which are further on down. So we're looking at this as business unfinished because we didn't quite get to a stable level on the weekly. And, if you just take the weekly chart, for example, 55.75 is really where this 50% level comes in. Let's see, 55.75. Yeah, 55.75. So, I would say, as far as this chart goes, it's definitely in a weak place. Prices in a weak place, as long as we're below that. And that's pretty much where we get this little bit of a consolidation. And you can see that in the front month also. That's that consolidation we were looking at. And here we have 55.17. And if you push into the structure a little bit, we're into that 55.90 area, right? So that's,
It gives us a good band there, doesn't it?
yes, it's a good band. And, S&P, of course, when I say 55.90, of course, it's going to push up into 56.10,
Mm-hmm.
56.11, right? So you always have
Mm-hmm.
to go a little bit and see how that works out. But the thing is, the second thing to remember is the reason we're still looking for counter trends is because it doesn't really look like we finished off anything. And I'm not expecting, major highs like this that came in on the techs and so many stocks and indices to just kind of, be done with a couple of bars, even though they're weekly. But I think there's more to come. Now we're just working on isolating these counter trends and selling them. So sell side still the focus when time and price comes into play.
Barry, the other thing
Hmm.
that you're pointing out, which is important on that weekly, is
Hmm.
everybody in the market is subject to recency bias, right? Whatever
Hmm.
happened most recently, we think was going to happen again.
Hmm.
And if you go back to like where you have your weekly set, the COVID low, that was a 2 3 week thing, and then we took off. And I
Hmm.
think the people that are very bullish are expecting the same thing. And as you know, with like consolidations, if you get a clean one, then you get a sloppy one, and they alternate, and they kind of throw you off that way where it's not like the previous one always. So I think you got to think in your mind, yes, we had the recent COVID experience, but is this one going to be exactly the same?
Exactly. Yeah. Right. Right. And it'll always be some kind of a curveball, right? I mean, the people that thought that, I'm sure they thought it here when we went down 3 weeks, rallied one, oh my God, let's get in, right? And
Right?
then what happened? We came a couple of weeks down, higher low. Oh, that's it. We got the final bottom, rallied, false break, and that was it. That was the biggest part of the move was after that.
Sure.
After we had faked everybody. So I think there's plenty of that's going to be on board this time. So that's part of why we don't want to plan this out too far ahead. And I think you want to keep the horizon pretty tight. So we're
Mhm.
clear headed about what's happening and you can just trade it clear through without a whole lot of,
In other words, don't let your bias cloud your vision of what is actually happening.
yeah, man, we talk about this a lot of the, end of the show talks
Hmm.
and it's not easy, it's not easy. But if you really, really, I was thinking the other day, one of the things, because we talked about it like last Friday, the Friday before, it it's really about treating technical analysis completely separate from the news feed. I'm sure
Hmm.
there are overlapping things and things that actually matter, news that matters on days that matter. I think being able to, you know, put the brakes on it or not is really part of that keeping the balance. Keeping that balance is part of that playing with the pedals. How much should I listen to? How much, is it important around this corner that we get, what kind of news do we get? And if you're close to some kind of a high, what kind of a news could accelerate this? Not that you're going to trade it, but you're just kind of watching the flow, right? It's you can have your sails up, but you're kind of watching for the wind
Hmm.
and which way they're blowing. Anyway, just to say, it's one of those times, plenty of news to go around, and I don't think anybody can keep up with it. But your charts don't lie, and they're always stable, no matter what. So let's continue to sort of do that. Here's another weekly chart. This is our normal weekly chart that we use. And I think we had this box drawn in last time, and we were looking for a low between 48.21, which was this reverse ABCD. And I know we've been talking about this for a couple of 3 weeks now, um, before we got there. And this 48.72 I've had there for a while. And the fact that we completed that, I think, well, yeah, of course, I even posted a thing on X as it was happening because that was an important support level. And we got there, we bolted out of there. And so I think the low is good. And it's really the what's left, even from this perspective, right, of this chart, is really to figure out, okay, well, where's the next counter trend? And what we have this week is an inside week. And you know what that means? We really have to watch what happens next week. We could easily go up and sort of false break this week's highs. So we want to watch for all kinds of tricky behavior, I guess. But I think these lows look pretty solid for now. We're really concerned with the next resistant level. I guess that's my main point I'm trying to make in so many words. Here's the continuous weekly S&P chart. Again, I think the main point here is we really didn't come down into a clean level, 50% level. We kind of went halfway through. Again, because of that, I'm going to leave this lows as unfinished business. Yeah, we got a low and we got to bounce off of it. We might get a little bit of a rally out of it, but we're not finished here, which means, well, Ben, just like you said, people will have another dip to buy when time comes. So
Right.
that's how I'm looking at that. Next, before we move on, let's take a quick look at our 30-minute chart. Coming into this week, well, we had the lows Sunday night going into Monday, rallied up into the 52.88 level, which was really, that's where the resistance was, main resistance. A couple of other levels too, this 52.16 level too. Anyway, the early part of the week was really about, double checking the lows. 48.46 really caught those early lows. The secondary lows, we got 8th and the 9th, they were higher lows, clearly higher than that. And if you notice, we started to make higher highs. And we talked about markets, at the time we talked about markets being strong above 50.26, and sure enough, we actually tapped it before we had that news little tweet trade, I guess, and we ran up right up into this 55.04. We had some other major resistance above that, but no, 55.04, 54.76 came up there. Again, we slipped off. 52.16 is really important, and I think we flushed past that far enough. Didn't quite get to 51.15. And from there, the key thing was we started making higher lows. So the next lows were exactly on our zone. Then you want to watch to see where the next set of lows come in. They came in above 52.53, which was a key level we were watching today and yesterday. Meaning if they held, market was in a good firm position and looking for stronger conditions above 52.88, which is a 270-degree level off the high. And we got that, right? And right up into the 50% level and even a little bit above. So the levels have helped us. It helped isolate. So we're not always bearish. We're trading it both ways when conditions allow, right? That's the way to look at it. Yeah, that's all I have for, and you're going to cover the NASDAQ and Bitcoin and some grains, right? Grains are getting some
Yeah, the
spotlight.
grains kicked up here at the end of the week. So yeah,
Mm-hmm.
we will definitely have a couple grains.
Mm-hmm. But so we'll cover all that in a little bit. And if you guys like our work, please remember to subscribe, like, and get the alerts and comment. Let us know how we're doing. And if you guys have any questions or any markets you guys want us to cover, DAX will get picked up next week. I just, what kind of week it was. We're just too busy during the day and, other family stuff to do after the markets. Just didn't have time to work up the charts for you guys.
It was a
Anyway,
hard week to work up new charts.
yeah. Especially like where's the motivation, right? You're like done. You're basically done with the markets at the end of the day.
Right.
It's so much focus. All right. So let's move on to bonds. Bonds had a really interesting week. Last Friday we
Very
left,
interesting. Yep.
right? Last Friday we left out with talking about the 50% level, the 122 level being the major resistance. Well, because it's 50%. And the fact that from 50 to 50, we ran 45 degrees. So that was sort of natural resistance point from two different places. And a false break to boot from here. And this high, not really, I wouldn't consider that to be a false breaky, but this one definitely was. And from there, when we did the midweek show, Ben, you were talking about how it looking like an expanding triangle. Now it's really looking like it because we can actually draw the angle, see how they look. But it's going in sort of the right direction. We were never really hugely bullish on this. We thought this would terminate here. But then, the bonds really didn't break down except for this false break, ran up, false break, and now, we got the real move this week. So needless to say, if you look at the bar from Thursday, you can see it stalled exactly at this 116.14, 116 and a half level. So that's the one to watch next week. And I also say if we could take this low out next time, we're probably going to go and retest the January lows, which I think we're on track to do. And if we do that, who knows? Maybe 90 might be next. But, bonds don't necessarily go straight down. So the 116 and a half, 116, 14 levels will be the one to watch because that's where we might stall out before the next downturn. And that's what I have for bonds. Let's take a quick look at the weekly. Here's our normal weekly chart, 144 degrees. We talked about that. If we can settle above that, great. If we can't, then probably consolidate above 14. Well, we didn't we weren't able to stay above, and we really couldn't stay in the middle. We were really weak, coming back down towards the ABCD target, perhaps. Anyway, we're below 114, so this is all weak territory. I mean, look how many weeks of work we took out in 1 week, a few days, I should say. So the bonds are definitely getting rattled. And we always were looking for lower lows to come in because this low really quite didn't make sense to me. And looks like it's happening. I mean, all we need is a set of lower lows here. We have lower highs already. So let's see what happens there. This is interesting. Square of 9. We went from line to line this week on a weekly basis. So
Very nice.
yeah. And now, one of those, if this week's low or high gets taken out, we're definitely rolling in that direction. We'll keep an eye out. Bonds could be trending. So crude, we were looking for a flush below the 61 level and maybe even 60. Looks like we got it. Now it's really a matter of getting, how can we get above the 64.75, right? That's the big overhead now. Like the mother of all overhead, if I've ever seen any. Got months and months and months. So, when it's like this, usually it's a news event that breaks it out, gives it enough
Exactly.
energy, right? Power to
Something
break
news
through.
driven. It has to, push it through
Hmm.
all that.
Yeah. So if it's quietly consolidating here, really be on the lookout because that it'll take some kind of overnight news or something to gap through it or break out through it. So we'll watch it closely. But the first part of the deal is done, which was that we wanted to see sort of a flush, take all these out. So that part's done. Now we're kind of waiting for the second part, which is a part that could take a little time. Here's a weekly, pretty much the same deal. I mean, we were looking for these lows to get flushed out, and luckily we got all these lows, from 2021. Everything got cleaned, and and we sort of got out of there pretty quick. So the rest of it might be just as easy. Let's watch. We don't all have to jump in at the same time, but I think since we got part one, which was a break, now we have to wait for part two. Theoretically, right? That's the thing that should follow. We should be okay.
And with
Mo-
crude, it's a lot of times the news is like bombs away somewhere in the world.
Yeah, yeah, yeah. We have to, and usually when we're sleeping, so so we got
Exactly.
to really be on top of it. Looking at gold, well, very, very strong patterns. We had this 72. Sure, we had a little bit of a pullback after that, but right back up. So can't keep gold down now. We are in really good shape. I think we kind of picked that up early on when we had a few squares that came in, but they were taken out right away. And the rule is if we have good squares, good levels, and the market, normally the market would correct off of those, in a decent way, versus doing very tight consolidation. So the fact that we had very, very tight consolidations, and even with this news, we held the structural support. I mean, look at this line here,
Perfect.
right? Look at that. That's, you don't need squares for that. Look at that.
Mm-mm.
Perfectly. So which tells us that, gold's really strong. I mean, we don't have to say that, but we're saying it down here when it held. And it's been doing that for a while. Even at the beginning of the triangle, we came up with the structural support here. So technically very sound. And now that we're above 360-degree level coming off the 2022 lows, gold's in really good shape. Sure, we're at the 50% level, probably time for a breather. But way I look at it, as long as we're consolidating above this 360-degree level, which is 3079, market's very strong, and let it consolidate and do its thing. And the way it's going, I mean, might as well get to 450. And that would end up being right up around 3442 and maybe even higher. So we'll see. And if you look at the weekly, I think it'll probably make more sense about why, where we're talking about maybe higher. I didn't really want to get into the weekly because there isn't a whole lot to go through these. We looked at it midweek and last week. We got the break, so now we're basically looking for the turnaround. And gold, the reason I said that, might as well wait for higher numbers, 3,500, 240 degrees up from the 2022 lows would be around 3,550. So we have room to run, especially if we can hold above the 330.66. In good shape, big outside reversal, very well behaved. What else can you say, right? I can't say much. I can't think of anything negative. I think gold is one of those markets, like cocoa, when it gets rolling, it just trends and trends and trends.
Yeah, and I
And
think the other thing that you said, which I hope people picked up on, it's just like, when we talk about the ABCDs, when you have a
hmm
good ABCD and it's exceeded, the
hmm
market's going to go strong. And it's the same thing with good squares. And I think you're seeing that in gold. It's blowing
yes,
through every
yeah,
single good square we come
hmm
up with.
yep, yep. And that's just how it is. I mean, there's even a joke, when you're looking at Gann squares and things, there's no end to how many squares you can come up with. And in a bull market, it'll hit every square because that's the whole point. It's trending. So one of the things to watch is not to sit there and expect every square to turn the market, but you're looking to see how price behaves around it. And if it takes it out, you know what to do. You go with it. And if it squares out and corrects and starts, this is the part of the reason why we wait for lower highs or higher lows to, have the price action kind of confirm the quantity that you just saw.
And Barry, we've been talking about since gold hit 2000 back in 2023, we've been saying,
Mhm.
look at the consolidations. They're more burn in time than they are price. They're very
Yeah.
shallow
Yeah.
and then it goes again. Very
Yeah.
shallow and then it goes again. Every
Absolutely.
single time. I mean, you can go look at your charts and you could see this exact phenomenon
Mhm.
that we're discussing.
Yeah. And I remember watching it from these lows because I remember these boxes we drew out. And I remember specifically this one saying that, hey, when we break out of this, we're going to run. And I remember you talking about, hey, these are huge bottoms, market's going to run once we break out.
Yeah.
And I remember sitting on top of this 90 saying, well, this is not negative. This is
No, no.
positive, right?
But it was frustrating everybody because it wasn't moving, right? It
Moving
was just
exactly.
for months it was going sideways and we were saying,
It's
that's going to
bullish.
be
Yeah.
bullish.
Yeah.
That's bullish.
And if you don't have these lines on how to measure these moves, You would think that, right? It just
Yeah.
looks like it's going sideways and all your indicators are losing momentum and it's like it's all over.
Right.
So anyway, that's gold. Let's move on to silver. Silver had a quick pullback down to 180 degrees. This is coming off the low in 2020 again. And it looks like we're going to consolidate for a bit. Um, silver didn't make new highs, but we didn't exactly go to new lows either. So we're kind of consolidating here. And I think long as we're above 32, um, well, not 32 in this case, 31 and a half is 32 from another square. So figure 31 and a half, 32, we're above that. I think silver's in a better position to go up and test the highs than not. So the fact that we're up in here is positive.
Yep. I have a
Yep.
good weekly square I want to show everybody on
Theo, great,
silver.
great. Because I don't have a silver weekly ready, but that's great. You're going to cover it.
Hmm.
All right. So copper is the other one. Copper, we caught up pretty well with it on last week, so I don't have to go into all the details. But the point is, we came down and found support near near the original square, which is the 60-degree square. And I thought for sure we would come down and maybe do a false break at
Yeah.
these lows. And instead we have a little bit of gap. So I think, every time that happens where we come down, like it should theoretically make uh, some kind of false break, but it doesn't. Normally that just means it's stronger, and you always want to watch for that during the day or not. And in this case, sure enough, we came back a second day, higher low. We took off. Then you can see Thursday, very sort of subdued price, and we took off today, Friday, broke through the 50%. Very key level. I think now if you can hold that level, around 447, even 440, 447, I think copper is in good shape. I think generally, if we can stay above this low, we're in good shape because what we're looking for next is some kind of a higher low. So let's see how that shows up. I think that's the deal here.
Hmm.
All right, let's take a look at the weekly copper. Not much to say. We talked about the high coming in right at the 216 level. Holding about 144 would have been great. But with all the volatility, everything, this is not too bad. So the lows held above, the critical trend line. We had lows. This is coming off the weekly and managed to get above the 144-degree level. So let's see. I think the key now, as far as the overall pattern goes, is to see if we can sort of consolidate above this 424 level, which is the 144-degree level. If we can consolidate up in here, I think we're in pretty good shape. Otherwise, if we can't stay up here and get below 424, I think we have well, unlike these two times, we might have a lot more downside.
Yep.
So, I mean, so far it's okay. We're making higher lows, right?
Hmm.
But I think we really can't afford to lose it at this point. And anyway, so that's copper. Anything you want to add to that?
I think that 144 level's the key.
Yeah, over there. Yeah, that's true. All right, let's take a quick look at the dollar. And the cool thing about the dollar is we almost came down to the 90-degree level, which is this dashed line,
Hmm.
and held right above it. So let's see if if we're done. And here's another example of where we pretty much come into time, price and time. We try to mount some kind of a rally. Of course, there's an overhead, and we fail in a big way. So that's an example, squares,
A very good one. Yep.
when they lose it, it really goes. I mean, the early signs were, when we couldn't really take this high out and started making lower highs, and that's when we started to fail, especially as 107.25 failed, and you can see the rest is history. Yeah, so that's the dollar. It's going to be interesting to see. So what do we think for the future? I think, as long as we're above the 90-degree level, dollar's in pretty good shape for where it is now. So 98, say 98.75, we can stay above that. we can say the 90 looks like it's going to hold. 90 should hold theoretically, right? Most of the time, 90 will end up doing all the work. And we took out these lows. We took out some of these levels. We were looking for some kind of a flush below them, some kind of a false break. So as of now, we got that. We got the break. Now, if it's false or not, we'll have to see in the next couple of days.
Yeah. Yep.
You know, so but as long as it's 98, um, let's say 98.85 level is held, then we'll have to see how we want to figure out a rally coming off of this. We're okay. We can find there are some timing points. We have 72 days coming up, but 60 is really the number, and we want to see how it works out. If you're going to go really test the 90-degree level next week, and if not, get back down to 97, which is also a really key level from the past. So for now, we're watching the 90 to see if it holds, and looking for any kind of a bounce. We got a triangle right about the 60-degree level. This 102.50 level can handle it. At least that's the next thing, is really a retest of that. So not much more to add to that. The weekly dollar, we've been looking at the square of the range, and last week we talked about how the 50% level is sort of a bull bear line, and how the last week before became a little below, but we rallied towards the end, and how we had seen a lot of lows right around that level, and we can hold about this 50%. That might have been it for the dollar, but it wasn't. So this week we rolled over again, and we took out the 50% level, and we made new lows for this round. So again, my eyes really going towards breaking these, flushing these lows out. So I think that's a bigger deal than most anything else. And the fact that now we're kind of sitting on this, the old support levels. So I'm really
Ye-
watching if that 90 that we saw, on the day, on the daily chart will hold out or not. Go
Yeah,
ahead.
you can on the weekly you can really see the flush.
Yeah. And it kind of happened. Yeah. Well, I mean, I think those who see it will see it. So what we want to see is the action going in the other direction. We want to see what kind of reversal we can mount next week. But knowing the 90 is right under, it's really important to know that where your levels are. And so we'll stay with that. We're watching the 90 for now. Now here's a surprise. I really didn't see this coming in the ES. I really thought this 1150 level should hold it, around that level, because it's a little bit above the 90, about the 1.8 level. And here's another case of where the markets always go a little bit more, or in this case, a lot more than you'd expect. But sure enough, where did it go? Right to the 50% level, which is around 1496, 1497. So that should be resistance, just like we talked about the dollar, having that 90. This is the 50% of the square for the euro. And if that holds, I think we can consolidate up in here and start getting ready to roll over. If the 50% holds. Now the whole point is, is this trend still going? Do we have enough juice left to put more time into this trend? So let's see how that works out. We do have a ABCD that, I don't know if we looked at it last week, but when I first saw it, I didn't think we'd get there because we were down here. But now, if I can put a brighter color, it's probably worthwhile. Hold on. It's a little bit thicker line. So you can see the ABCD comes up right about at the 50% line, which is, let's say 1500. Yeah. And or
It's a
115.
good target.
Yeah, 115, good target. And we have square wise, we have resistance. We have an ABCD target. And I can work something up for next week. But it looks like we're getting to resistance. And we saw the dollar pulling into something similar. So this sort of what I would call it entirely false move might have run his course. That, I guess that's the upside. You want to watch that closely from here on. All right, let's take a look at the weekly. And there's that same ABCD. I dropped that on the weekly. And here, taking out the 90 doesn't look as bad. It just looks like a normal, peak above the 90. And the thing here is we also did easily we could have done a false break. We want to see if we can hold above this level or not. And the level we're talking about basis the weekly is 1315. That's 90 degrees up from the 2022 lows. And we have an ABCD coming up into that high. I think that's enough evidence. We really have to watch it here and to see. Obviously, if we blow through that, we have a lot more to go and probably all kinds of trouble. But this is, to me, I'm looking at this as some kind of a flush or blowout move to the upside before we go for the final dive. That makes sense. All right. So that's that. Let's take a quick look at the Dow. Not much. I mean, we came down to the 144-degree level. Rally back up to the 41,348 is the key resistance. It was key support. Now we're coming from below. So I think long as we're below that, Dow's in pretty weak shape. And I'm expecting some kind of a consolidation here for the next move. And if we can get above 41,348, and I think there's more to go, at least to the 216-degree level. Otherwise, we're making lower lows and lower highs. So the trend looks to be down. I'm not going to argue with it. Hang Seng, really, really cool charts, man. We took out the 22,709, dropped immediately below 2380. And from there, where do we make the final low on Wednesday? That was 19,450, right at the line. 19,450 was right there. 72 degrees is a little below. We came right to the line. And what do? We gap above 20,380. Now we're holding above. I'd say this is a good example of price, breaking above or trading above and then holding. This is the kind of price action we want to see, we want to look at. What else do we have? Well, natural gas is sort of
Pulling
sideways
back.
back. Pulling back and filling, just kind of winding up, I guess. Hang Seng, that's really it. If you hold this low, I think, worst of the news we held, if we take it out at some point, I think we have new lows coming at that point. So for now, everything seems safe. And if we can hold above this 2380, it's all going to be pretty stable. Well, that's it for me. Let me put it back to you. Let's cover Bitcoin and NASDAQ and
Very
grains and
good.
everything else.
Very good.
Thanks. All right. Speaking of right numbers, look at that. Looking pretty good.
Yeah, we
Mm-hmm.
found some support.
Yep. Yep.
I mean, the main thing is this week, early in the week we got this plunge. Again, similar to the story in the ES, we didn't quite make it to the half square, right?
Mm-hmm.
Didn't quite make it down to the 16,300 area, but we found support here at 17 and pushed up strongly back up to 19. Remember we were talking about
Mm-hmm.
that? You can see the structural resistance right there that stopped it. And
Mm-hmm.
and now we're trying to clear this 18,750, let's call it.
Mm-hmm.
But we've been crisscrossing it for 3 days. So we'll have to see. That's next week. That's the key level. Do we get a bar fully above that, a daily bar? If we do, that means then the push is going to be, back into the structural resistance around 19,200.
Mm-hmm.
So those are the two key levels I would watch. I mean, if we clear that, then it's going to be, you know, up to this really, really big level, and you can see why it's a big level, right?
Yep. Yep.
So watch these three levels: 18,746, 19,200, and then just under 20,000, 19,900.
Mm-hmm.
The pattern, it's a pretty much a V spike here. So we got to see what we're going to do. The other thing we could do is we could burn time in here between these two.
Right.
I looked and saw what was the counter trend, from the March low to the high on the 26th. It was 15 calendar days. If we do, 15 here, 14, 15, it takes us to April 21, April 22nd
Hmm.
in that neighborhood.
Right.
And 45 from the high also takes us to that 21st date. Let's see. I think it's the 21st, 22nd.
Hmm.
So that's a couple dates to watch in addition to the rebel yell that hits on Monday and the other time counts you had out to the 17th. So I mean next week's going to be a pretty critical week to see, are we going to push and run or are we just going to stall out and then start rolling over?
Right. Yep.
So that's your daily. Let's take a look at the weekly.
Or if it's any week like this week, little of both.
That's true. Very, very true. Here's your weekly.
Hmm.
Uh, Again, didn't quite finish up, right? It would have been nice if we could have come down to this half square here
Right.
around 15,300. That would have been a nice, you know, little more than roughly one full square correction. And that would have given us a little more confidence that, hey, this is a meaningful low here. Right now, we're just in between. We pushed back above 1818. So next week, let's see, can we take out the high of this week, make a higher high?
Hmm.
That would be our first up week because even though we pushed this week, it's still, we made the lows early in the week. It's still another down bar. Last time, when we came into this low, we had an inside bar and then one up bar, and that was it.
Mm.
So what do we get this week? Do we get a higher high and get an up bar? And then, can we build on that? That's the big question. Resistance, you can see it's going to be from about 20,725 up to this 21,000 area. There'll be a resistance band there. But again, it's all about what kind and how long of a counter trend do we get. If we do
Right.
an inside bar next week or we get, just one up bar and then reverse, it would still signal weakness. Let's take a quick look at the monthly. So we broke this steep trend line. This is a 1 by 2, or I'm sorry, 2 by 1. We broke that, and but we did end up back above 18,200 for the week. So as long as we can stay above that into month's end, maybe we're just going to burn time and not collapse. But if we end the month below that and get, the next month's bar, which would be the May bar, fully below that, then 15,300 is the magnet. So
Right.
there's pressure. And I mean, it's as we were talking about, big cycles came in here. So it's going to be difficult to just be done with it, in a month or in, 2, 3 months. This is a longer cycle that has to get
Hmm.
either price or price and time burning it out. Anything you want to add on the NQs?
Well, it just seems like we have a nice downtrend started on the longer term.
That's exactly right. So treat it accordingly until we
Hmm.
start seeing, higher highs and higher lows on the bigger time frames. You got to treat it that way.
Yep.
All right, let's check in with our friend Bitcoin, which did very well during this mess. If you look at it on a relative basis, um, unsatisfactory lows again, though. We didn't quite get to the target zone or this full square, which would have been great structural support around 73,600. But we came down, pushed up. Now it's back. The key level this week we want to get above to keep the rally going is this 85,280. If not, if we're stuck, it could be between the half square here and the full square. Which we were in for quite a long period of time.
Hmm.
A month or two. So we may just slosh around in here. But we'll watch. We know if we get above it, if we can clear 85,280, that we got some impetus to move higher. Take a look at the weekly. Bitcoin.
Hmm.
The band remains the same.
Yep.
71.1 on the downside, 89.5 on the top side. Until we clear one of them, it's just going to be, ping ponging and chopping around in here.
Yep. Yep.
The monthly has a good look, though. Let's look at the monthly because this is something we were looking at. Look what we hit here at the low.
Hmm.
We got that full square tap and bounced pretty nicely.
Yep.
It's another down month, though. So we've got one. Well, this was an outside reversal. We got one, two,
This is like
three,
good news, bad news.
yeah, four months. So the correction
Hmm.
is happening. Look at what we had here. We had a pretty long correction here, and then we took off. But the technical damage is not bad at all.
Hmm.
We're just coming down to structural support. Now, if we lose that and start coming in here, then you got to say, okay, maybe something else is going on. But if we can stay above 74.5, it's still bullish.
Mm.
Very bullish on the long-term picture if that holds. I'm looking at this 90-month cycle though, from 2017 to the highs.
Hmm.
That's no joke. That's a long one.
Yeah. Yeah.
So how are we going to burn that off? Let's see. What do you have to say about Bitcoin? Anything you see differently?
Well, yeah, we didn't. Well, on the daily, we quite didn't get to the support level.
Hmm.
The trend is clearly down. The triangle broke to the downside. And if that was a false break, we'll find out soon enough. Otherwise, this is just a retest going into the breakout area, and we're probably going to turn back down again.
Right.
So that 85,000 seems like the key level to watch here.
Very important.
Hmm.
Apex of the triangle, full square,
Hmm.
very big, very big. So we'll see. We'll see how that goes.
Yeah.
On the commodity side, as I was saying, we have a few commodities to go over. But one of the things I noticed now it's only a couple weeks into the month, but I was looking at the monthly bars in my review. A lot of outside reversal bars are working. Outside bars, outside reversal bars on a monthly basis. So really going to be interested in seeing how they resolve, going into the last 2, 3 weeks of the month.
Hmm.
If those hold there, as you know, we always pay attention when we get outside reversal bars on weeklies and monthlies because those are big, and they signify, important turning points a lot of times. So we got to watch that and see how they play out.
Hmm.
Meanwhile, let's go check on our commodities. We will start with corn. That's the monthly. Let me start with the daily. So here's why corn looks interesting to me. We talked about this false break, and then we reversed, made a lower high, and then pulled back and made a higher low. And then look at what we did this week.
Kicked ass is what we did.
Yeah, that's a powerful move, right? That's a,
Hmm.
a fast move. You can see 1, 2, 3 days in a row we closed on the highs.
Yeah.
So that to me is a very good move. We held this 451 at the half square, and now we're pushing up to the 523 area.
Hmm.
That should be the magnet now. So
Yeah.
corn looks like it got re-energized this week. I don't know what the fundamental reasons why, but we know this. It came down probably in anticipation of the tariffs, and now that the tariffs may not be as bad as they thought,
Hmm.
it's starting to move again. And we did square out here. This was a
Right.
good square, 72 by 144.
Hmm.
So we got a reaction, but a higher low out of the reaction. And I'll be damned if another commodity doesn't give you a false break before scooting right there. It is,
Yeah.
and look, it's like a tick or
Absolutely.
two,
Hmm.
also. You know,
Every time.
yep. So that's the daily. Let's take a look at the weekly. Nice big bar in the weekly, closing on the high of the week.
Hmm.
Basically took out 1, 2, 3, 4, 5 weeks of price action here with that bar.
Yeah.
5 weeks of highs got taken out. So it looks good. Looks like the next level is that high at 517. What we want to see ideally is push up, get above it, then sit on top of it, and then we can, stair step and build the ladder to get to
Mm-hmm.
621. So we look good on the weekly. Let's take a look at the monthly.
Mm-hmm.
Monthly still battling at this 463.
Right.
Last month we crisscrossed it. This month we're crisscrossing it. But we have so far an up bar so
Mm-hmm.
far this month. Let's see if it can continue to push. That 521, 520 area is the next
Mm-hmm.
high we need to make on a monthly basis. But we definitely got some sort of reversal here this week.
Right. Right.
Anything you want to add on corn?
We're good. I mean, the important thing was when you called out those 451 lows when we got in there, start
Hmm.
to make the false breaks, and now we're running. So,
Yep,
I mean, how perfect, right? Ran up to full square, pulled back to half square,
that's what you want to
and
see, right? Look,
here
because
we are.
we did one square up,
Yeah.
50% pullback, and then
Mm-hmm.
boom. That's Gann's bull market rule, right?
Yep.
Always buy on a 50% pullback, right?
Hmm.
In a bull market. All
Yep.
right, let's look at another one that looks like it woke up from the dead this week, and that's beans. Similar pattern to corn. And I found this. I was messing around with the chart as I was preparing it, Barry, and I found this nice long sort of sideways ABCD. But look at that.
Mm.
This was we saw it bottoming here, and then this is what it did. Frustrating the bulls again. Pulls
Hmm.
back, higher low, and then here we go. So daily basis, this 1035,
Absolutely.
1035 is
Yeah.
super super key.
Hmm.
We get a full because we you can see we haven't been able to get a full bar above it since like late February, and that was on the way down. So we want to like establish ground and stay on top of that, and then that'll get this thing really going towards 1125. But the pattern's good. There's your
Hmm.
ABCD, higher low here.
Hmm.
Starting to get that rounding that you get when momentum kicks in. And then look at the last 3 days. One, two, three, boom, right up top, closing near the highs or at the highs.
Right.
And close the week on the highs. That's
Yeah.
nice. Nice to
Very
see in a
strong.
commodity.
Yeah.
All right, let's look at the weekly. Here's your weekly. Next big level is this 1060.
Hmm.
If we can get above that half square, you can see what that means. It means everything from last June, July will be below us.
Hmm.
Really big. But look at what we have here. That's an outside reversal bar on a weekly.
Hmm.
Opened on the low, closed on the high.
Well, reversal for sure.
Yep,
Big time.
yep.
And the trend
So
line held.
so let's see if we get some follow through early next
Hmm.
week.
Hmm.
Weekly basis, watch the 1060 level. That's what we want to get above and clear. Let's take a look at the monthly so you can see the really long-term perspective. We're holding this 983. And what do you see here? One, two, three, two higher lows.
Hmm.
So it's been boring, right? It's been frustrating, right? Because it's not going anywhere. But these are the telltale signs of accumulation that mean, you're about to be paid for your patience. So monthly basis 983, which we're well above, but that's the key. We want to stay above that.
Yeah.
Anything to add on beans?
No, we're good. Good cover.
Yeah. Wheat, I was looking at wheat. I didn't bring it out yet. I want to see it make a higher high on a swing high on the daily before we throw it in. It looks like it's got a
Mm.
little more work to do, but it's, as you know, the grains move together, so it's following. As long as it has a decent week, we'll highlight it next week and talk about it. All right, let's go to the next one. This is one we recommended short.
Hmm.
Short worked out nice. Look where we found
Hmm.
support, Barry, right where we talked about.
Yep.
Half
On
square.
the mid-week show.
Yeah, we talked about the half square and then this sort of support level that,
Hmm.
this sideways consolidation. We said, hey, if we get down here, it's probably not a bad place to take some profit.
Yep.
And we had a little bounce. So now the key thing we're going to watch is what do we do at 366?
Hmm.
Do we test this full square and fail? If we do, it could set up another good sell. But first time down into this, you kind of the odds favored that it was going to hold and bounce, and it did.
Yeah, yeah.
So watch this week. Watch 366. If we can't get above that and we fail, it could set up another short
Another
here.
whoosh.
Yep. And this thing moves, as you know.
Hmm.
Here's a weekly picture. Similar story. Here the level is 331, but came down into this support, pulled right back up into this weekly resistance level. Now it was
Hmm.
support, now it's resistance. So 358, which is not far off that 366. Watch this area. Call it 350 to 370. If we
Hmm.
have trouble here and roll over, it'll set up another short. Lastly, let's take a look at the monthly. Monthly again came down, tested the half square and
Hmm.
bounced.
Hmm.
But the key thing is we made a lower low this month, right? We had an inside bar last month, took out the low of that inside bar, and then boom, whoosh. You can see that the top looks pretty good here. Now we just got to see how's the pattern going to play out now, and what kind of a pullback and a correction are we going to get? Is it going to be a big correction? Is it going to be an ABCD? We
Hmm.
don't know yet, but the evidence is starting to mount up that the high here was pretty good.
Right.
Let's see. If we get back above 366, then it becomes probably more of a coin flip that this high was good. But as long as we're below that, it's looking pretty good.
Hmm.
So you got your markers, you got your levels. Anything else to add here on coffee that can help
No, we're really
people?
watching the bounce here. 366, as good as level as any.
Mhm.
So yeah, watching that closely. We
Watch
could
that
go a little
closely.
higher, right up into the triangle, and still be on the weak side. So we'll
Yeah,
watch
the
that.
apex is about
Hmm.
380, so
Yeah.
that it could put, like things do, they always push a little more,
Hmm.
and
Yep.
and that would be roughly another eighth of the square, so it
Yep.
could go up that high. But you want to see it settle on top, and then that tells you a different story. If it
Hmm.
pokes it on top and then fails, that's good. That's good for the continued direction south. All right, let's take a look at the last chart I wanted to show you, which is silver. This is silver weekly.
Hmm.
Look at how this thing
And the
handled.
money, 2750.
I mean, perfect, right?
Yeah.
And time here. We have time, like perfectly on time as well.
Yeah.
So that's what I wanted to show. Volatile as hell market, right? It was down 7% one day, down big, up big another day. This is a weekly, so you can't see all the intraday stuff, but look at where we got the low on timing.
Hmm.
The low is in an area where very bullish if we can hold that. And then look where we closed, just over that 32 number that you were talking about when you were looking at the daily.
Hmm. Hmm.
So next week, if we can sit on top of 32, it's very bullish.
Right.
If we crisscross it and go up and down around it, then it's got to burn off more time, and maybe something else is setting up. But watch 32 next week. But I wanted to make sure everyone can see, how dynamic these squares can act even in big volatility. And it
Hmm.
just gives you that marker to know, hey, okay, I'm okay. I'm in good shape. If I'm bullish, if I want to be bullish, this was a very positive reaction off of this hit here,
Hmm.
to say the least. I mean, look where we ended up.
Okay.
We don't have much time, Barry, but in the last few minutes, I wanted to revisit what you were saying. Because part of what we do is try and develop a roadmap, based on
Hmm.
price action. But give us like I know that you could spend hours talking about this, but give us like one thing you do to prevent yourself from being too biased or blinded by, the path that it looks like it's doing based on your analysis versus being open to what the market's doing so you see if it's doing something else. How do you do that? Like what's one tip you use to do that?
You mean we have a most probable scenario and then the market's doing something outside of that?
Right, where because the problem is, and I've suffered from this early in my career, was
Mm-hmm.
you have a path that you lay out that makes sense based upon what you've got, the data that you have so far.
Mm-hmm.
And because you're focused on that path, you don't see the price action doing something differently.
Mm-hmm. Mm-hmm.
Right. You're like blinded to what actually happened because you're so focused on the bias that you have in your mind, based
Right.
on your work.
Right. Well, I mean, part of it I think is ongoing, right? It's self analysis. But the other thing is, actually, last couple of few months of talks we've had, it's really been about it all comes down to self-discipline. But it's easy to just say it. It's kind of a topical thing to just throw out there. But I'm realizing as we talk, one of the things is as you do your work, and we've been trading forever. So over time, what happens is your mind or your brain automatically adapts to the best, let's just say, methods and ways and methods, right? That
Hmm.
helps you not just survive, but be successful at what you do. And so what I'm realizing, a lot of these things fall into place over time. It's not something you just do it purely through willpower or purely through discipline. You have to
Hmm.
have discipline day to day for the little things. And I think when you have enough of those nailed down, then the bigger pieces fall into place. And then you're able to manage all of that. So well, look at the paths what we talked about. Like last week, we talked about the S&P coming into, potential low coming in on that window, right? We have a
Hmm.
45 and a 90 coming in. We said, well, 7th is the day for the 45. The 90 comes in right around the 10th. So if you take minus one, give one, you get around the 9th.
Hmm.
So it kind of lines up with the entire week. So you can't trade like that. So you have to look at the 7th, and then you have to see if price and time comes in. And Monday, price and time came in. And at that point, you had to say, well, until I'm proven otherwise, I have to stick with the scenario that we're going to rally from here
Hmm.
up into the next point. Now, last week everything worked out because it basically the lows held, and we
Hmm.
whatever we did, all the gyrations, we ended up moving higher, not lower. So I think one of the things with squares is, and the reason we use price levels is that we always have a place to pin where we're going, and it's also step by step. We're if it's moving higher, silver for example, 2750, okay, great, that's support. If it holds, we're looking for some kind of a bounce, great. If it doesn't, well, then we're looking for the weakness.
Then you got to look lower, right?
Yeah, you got to look lower. So by using really strict rules for price and giving the little bit of flexibility that you need to have in there, then you kind of account for both, right? Let's say we break
Yes.
below 2750 and all of a sudden we try to come up and we fail. Well, we know that pattern. If we break a level, now if it happened anywhere else, we just ignore it. But if it happened at levels that we know are important, like 108 degrees over here, 72 degrees,
Hmm.
144 degrees, I know 144 degrees. So at these levels, if we fail or not fail, keeps
It's
let,
significant.
it's significant. It lets us weigh out the probabilities. And if it goes the other way, then we know the probability shift. So you can almost say these levels act as places of probabilities balance,
Yep.
this way or the other way. So anyway, to bring it all back, just to say that I think the easiest way is to, leave it to some kind of a technical method or formula to help you gauge the thing and not get involved with the story, some narrative
Right.
about the market or a narrative about what you think, and
So
just let,
use price to summarize how price interacts with levels dictates the odds, and we stick with that.
we stick with that. Yeah. And if something other than what we expect, that way we account for both. It's a binary, right?
Yep.
If it's not gonna hold, it's gonna go the other way. So you
Right.
account for both.
Excellent. Excellent. Well, thanks again, everybody, for supporting the podcast. Please like and subscribe and share the link with your friends. We had record views this past week, and it was really exciting. So we appreciate that. As always, in this volatile 2025, rest up this weekend, and we'll talk with you next week. Take care, everybody.
All right. Good job, Ben. We'll talk to you next Friday.
Yep.
All right. Have a
Take
good
care,
weekend.
everybody. Bye
Bye
bye.
bye. Ciao.